Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of PayPal, ticker symbol PYPL, which closed the year at a price of $61.41, being down 2.65% on the day. And yeah, I want to do a follow up because the last video that I put out on PayPal came out on, I believe, December 16th, which was a Saturday. And so that was basically after this red candle day on the 15th when price went down 99 or 0.99%, sorry. And yeah, so in that video, I went over this uptrending channel and this red line resistance that I suspected would act as resistance. Following that video, it does look like over the past couple holiday weeks, we have seen that acting as resistance, a couple closes above it, but ultimately being rejected. It does also look like the 200-day moving average, this blue line that you can see right where the cursor is, where that blue dot is actually, that is at $64.13. So that I suspect will be serving as resistance as well, whereas the 21-day moving average, is kind of orangish line, is just below the closing price of Friday, December 29th, the last trading day of the year. And that is at $60.70. So there might be some support there. So that is encouraging. And then finally, the 50-day moving average, this yellow line, is currently at a price of $57.26. So it is possible that is a downward level of support that the price might go to. But for the rest of the video, I'm going to remove the moving averages just so it's less cluttered. And yeah, I wanted to elaborate on what I went over in the last video, also talk about a falling wedge pattern that the price may be testing a breakout of soon, which was pointed out by TrendSpider. And also I wanted to go over a couple fundamental things because that was requested. And so basically what I see with this is that that red line has definitely served as resistance. Also the top of the wedge, which I'll show you a bigger view of taking a step back in just a minute. It does also look like, because we've had this consolidation there and also taking a step back, we have had a lot of volume traded around the current price. So it is going to be tough to break above that level. But once it does break above, let's see, right around $63, there doesn't seem to be that much volume traded above it until we get to a price of around $71.72, where there's this volume shelf. There's also a gap that was formed on the gap down here that was formed in August, and that would be going to a price of $72.50. So I do think there is a lot of upward potential if this can break out of the wedge, break above this resistance. But as I had mentioned in the last video, this uptrending consolidation suggests that bearish moves are to follow. And, while I did not extend this channel to include well, actually I could do that right now. What, might as well. Guess I have it locked. I'll unlock it, extend it out, see how that looks. So basically we're at the bottom. I'm glad I did that. We are at the bottom of this uptrending consolidation. Maybe that has acted as support and we will get a bounce into the new year. But it is quite possible that we see a breakdown, maybe coming down to this volume shelf that is around $58, $59. So I could definitely see a breakdown to filling these two gaps to the downside at $54.72 and $52.20. But, this could also be a fake out. There could be some support found at the bottom of this channel, like we saw at the beginning of December 8th. We did see a test of that, but then we saw a few days later on the 13th, a 4.82% move on the day to the upside, then going up to test the top of that channel. So there is some encouraging stuff there. Also, as mentioned, TrendSpider identified this falling wedge pattern that has been tested multiple times. And actually, you can see the touch points that I have on here. They look, I guess I I should have adjusted that before making this video because they're not locked into place at the exact right prices I like. But you can see that has been tested multiple times, most recently in July. And then now we are trading right around those levels. So that does seem to be significant resistance. And then the bottom of that wedge goes back to, let's see, the middle of May, having tested that as support here. And yeah, it hasn't really been tested. The bottom of it has not really been tested until more recently when we saw that at the end of October 27th, with a low of $50.25 on that day. So yeah, I mean, I do think that we could be seeing a breakout in this big red candle day with a 2.65% drop the last trading day of the year. That could just be selling for tax purposes, things like that. Maybe we see some buying into the new year. So this could be, a fake out to the downside, and then we see a breakout into the new year, breaking out of this falling wedge, breaking above this long-standing support and resistance, and make our way up to $71, $72. So I do think that is pretty feasible, but I do also think it is, a little perilous right now that it could drop down to the mid to low 50s. So be cautious of that. And then, so a couple fundamental things that I wanted to go over. One thing that stood out to me as being fairly bearish news was, you probably saw this, that Amazon is no longer accepting Venmo. Venmo is, I believe, owned by PayPal, if not the same thing. And so that is a bearish thing, that Venmo cannot be used on Amazon. One thing that I did notice in my Venmo account, actually, that I think is fairly bullish, is that PayPal has a stable coin, which I believe is PYUSD. And so I think it's great that PayPal is forward-looking, thinking about cryptocurrency and utilizing a stable coin. I think that's a very, very good sign for PayPal, the company. Also, looking at some of the news here, this article from The Motley Fool mentions 24 spectacular stocks to buy, hand over fist for 2024. So one might think that is a very bullish headline, that, oh, I should buy PayPal. But that could also be, some big players are wanting to dump shares on retail. And, so maybe that's a thing to be cautious of. You don't want to follow the sheep. You want to be a wolf. And so let's see this other article from Seeking Alpha, best alternative to PayPal, that there's competition. You might think that that's a bad thing for PayPal. But if companies are competing with PayPal, that's saying that PayPal is a dominator, and that is a good thing for the company. And then there's also been some unusual options activity, whether that's going long or going short, calls or puts. I'm not really sure, but there's a lot of stuff going on with PayPal in the new year. And I do think that we might see discounted buying opportunities in the low to mid 50s. But if we don't, I do think that it could be going up to 72.50, if not higher. I do think PayPal is a great company and one to hold for the long term. But when looking at the short-term price action, it is good to be cautious that we might see some downside in the near future. And so those are my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thank you so much for watching.